I do want to take this opportunity to welcome everybody and thank you all for being subscribers. And one of the many, many questions we got is they asked me to see if I could talk slower. So I'm actually trying. I hope it's working out for you guys. But I'm very excited to have Nathan Mock, who's one of the renowned experts on valuation. He's got several peer-reviewed public articles. And of course, Colton, who's the CEO of FastGraphs, COO of FastGraphs, and also the head of our development committee. He's got some announcements to make about future developments. But the general theme of this particular webinar is how subscribers can find good investments utilizing the FastGraph tool. And by the way, the screening tool is probably the primary way to do that. So Nathan and Colton are going to talk quite a bit about how you can use the screening tool to effectively find good companies to invest in. But I'm going to go ahead and share my screen now. And I'm going to show another way. FastGraphs has multiple ways to basically identify good companies. And Colton, everyone seeing my screen? I think so, yeah.
Yep. Yeah, we are seeing the preset portfolio screen.
Yeah, all right. So the key is here that both basic and premium subscribers can actually utilize the portfolio function of FastGraphs to find great companies. Premium subscribers fortunately have the preset portfolios that I'm pointing to here. And the basic subscribers have advantage of a few of their own portfolios where they can build. Like, for example, you could download or import the S&P 500 constituents yourself and create a portfolio like that. Okay. And frankly, myself, I like to use these portfolios maybe as much or more than the screening tool, although I do use both. Because the beauty of the portfolios is if I'm looking at the S&P 500, the first thing is if I click on that, I know that these are lists of very high quality companies, some of the largest and most respected companies on the planet, because they have to qualify to be included in this index. So rather than look at a bunch of companies that might not be as high quality, I feel pretty confident that I've got really good companies in that. Now, when I go to the portfolios, you have the ability to create views. Okay, you can click this button here and create your own view. So I've created what I call the screening comparison view here. And what I've got here is I can look for different strategies. FastGraphs is available to screen for all kinds of different companies. For example, you can screen for growth, you can screen for income, you can screen for value, all of the above and any of the above, and other features as well. You just have to know how to manipulate the headings here, the metrics that you're looking for. So I'm creating a screen here that's going to let me look for dividend stocks. It's going to let me look for growth stocks within the S&P 500. I want to make that clear. And it's going to let me look for just fairly valued stocks. So here are the headings I have here. The first thing I have is estimated EPS growth. So I'm going to cover growth stocks first. Now, FastGraphs utilizes three formulas to identify stocks. And when you're looking at growth, we define that as any company that's growing at 15% or better. But by the way, a company growing at 14% would qualify as well. Maybe even one that grew at 13%. So I want you guys to understand, everybody understand, that these are just kind of parameters that help you create some baselines here. So we're looking at estimated growth rate above 15%. Now, when I'm looking at this, if I see a company like the first one on the list here that has some ridiculously high number, 818% growth, I'm going to easily determine that there's a reason for that. And the reason for that is probably not because it's really going to grow that fast, maybe because they had collapsing earnings and this is just a recovery. And I know that because I look at the PEs minus 645. So that tells me there's great losses here. So I would immediately exclude that company. But utilizing Peter Lynch's formula, that's often referred to as the PEG ratio or PE equal to growth rate, I want to look here for companies whose PE is equal to or lower than their growth rate. But I also want to make sure that I have good businesses that have consistent growth over time. This is my own personal view of that. You can have your own views. So when I go to the adjusted earnings persistency score, and we got a lot of questions on what this score is. Well, this score allows you to determine how consistently a company has grown their earnings over time. And the higher the score, the better. All right. So a company with 50% adjusted earnings persistency score means that their earnings were very volatile and only grew maybe 50% of the time. So I'm also going to be looking for scores that are very high there. But what I've done here for sake of time and everybody's time on this, I've come up with a couple of examples that I've determined on here where I'm looking for a good growth stock. So one would be Supermicro Computer. And so I'm going to go ahead and go into Supermicro Computer here and show you what I'm talking about. Now, the company's current PE ratio, blended PE, is 31.93. I just want to take a moment here to point out you can change the time frames. I've got a lot of questions on this, and you get different results because you're looking at different time frames where you've had different levels of earnings growth or loss. You've had different records of dividend growth if you were looking at a dividend stock. The numbers are not always the same. Okay, so here we're looking at a 33% growth rate going back to beginning of 2015. All right, and so that's what the growth. If I shorten the time frame again, now I got a higher growth rate because I've called out a lower number. I'm using a 30 PE as a benchmark here. But you analyze this stuff and you evaluate it. One of the things about doing this is to determine if growth is increasing, decreasing, or staying the same. And you can do that by running companies through. Remember, this is an analytical tool. It's meant for you to evaluate and analyze the data. It's going to organize it and do all the calculations for you, but you still have to do the judgment. You still have to look at it and figure out what it's going to be. And another question or comment we got commonly in the question portion of this was, how do you do this? What judgment do you do? When do you buy? When do you sell? Well, the point is you do have to apply judgment, but I believe, and many of you said that the past is not necessarily indicative of the future. And that's absolutely a correct statement. So I believe you can learn a great deal from the past. I've said this many times. You can learn how good your company is. And this is one of the great qualities of FastGraphs. If you use other screening methods, you can screen for all kinds of metrics, but FastGraphs gives you such a graphical picture of how those metrics have jived over the historical period of time. But when it comes down to making decisions, you always want to make the decision with the forecasting tool, in my opinion. Now, the analysts that are following, that are reporting on Supermicro, there are 15 of them, and they're forecasting 34% growth going forward. The blended PE is 31.9. So the PE is technically lower than the growth rate. Now, we've capped that at a 30 multiple, but I do want you to notice you have other PE ratios listed on the graph here. So if you're looking at a PE of 34, it's going to be somewhere between these two numbers here. I'll just be conservative, go to the 33, and I can point to that. And that would give me the what if scenario. What if the stock generated this earnings growth as the analysts expected? And what if it traded at a, in this case, I'm using a 33 PE. What if it traded at a 33 PE? What would my potential rate of return be? And that's how you can use this to identify growth stocks. But you still have to make the judgment and recognize that 34% growth is very hard to achieve, and a high multiple is also hard to maintain over a long period of time. But you can do that with the FastGraphs portfolio review. And again, you could create your own S&P 500 if you're a premium subscriber with one of your portfolio options. So I'm going to go through this again very quickly and just point out a couple of things here. So let's look at SWK, if I can find it real quick. SWK, estimated earnings growth rate of 38.3%. It has a PE of 30.61. So I've got the PE is below the growth rate. Now remember, FastGraphs caps the forecast at a 30 PE, but that still gives you the indication that this is a company who's got more earnings growth than the current PE is trading at. So that gives you an indication that this could be a GARP. And GARP is growth at a reasonable price. Okay, it's different than some of the other iterations we do. So then I can look at my earnings yield. It's low because when you're looking at high growth like this, you're really going to be concerning yourself with future yields, not necessarily current yields, because of the power of compounding and the dynamics of compounding. Now, the company has a good persistency score. It's A- rated, and it has a decent dividend yield. So if I just simply click on the company now and look at it, you always have to apply your judgment. Now with FastGraphs, I learned a lot more than just what the simple metrics told me. I see a company that did have a high persistency score because their earnings grew very, very consistently for most of the last couple of decades. But then we hit this area where earnings collapsed by 56% and 69%. Okay, and that put the company into a totally different period. But analysts are expecting it to recover, and they have recovered to some extent already. The company has a December fiscal year. So again, if I go to the forecasting tool, what I see here is that based on a recovery of earnings, but this is a very high growth rate, that's why we flag it. If this company does grow at 38%, it could be an attractive investment today. And in this case, it could be an investment that generates a good rate of return for you, but it's also an investment that could give you some decent dividend yield going forward. Now, speaking of dividend yields, I can also use the portfolio functions here. And because you notice that I have dividend yield, I can just click on the headings. Okay, and that sorts the companies by dividends. Now, obviously, looking at First Republic Bank with 7,200%, that's actually a mathematically correct statement, but it's not. Okay, because you're looking at really aberrant numbers. I want you to basically recognize that you're looking at a company whose earnings have collapsed here, and so has their dividend, and their dividend will collapse. So I wouldn't put any credence on something like that. I would immediately discount that when I saw it. Again, you've got to apply judgment. This is a tool to think with. But as I go through here, I can let's look at Altria, the old Philip Morris, as I like to call it. Okay, now when I look at this stock, if I take the price off of the graph real quickly, I see a very consistent earnings growth. I see a very high payout ratio. One of the questions we got was, how can you determine if it's a value trap or not? And they were concerned about the high payout ratios. Well, you can see that by just visually looking at the graph. The payout ratio is very high. If you looked at a company with very low dividend yield, you could see a lower payout ratio. But again, going back to the portfolio view that I wanted to look at, when I look at Altria, I see that it's got an estimated earnings growth rate of only 3.89%. That's reasonable, but the PE is less than 10, and the earnings yield is above 10. And when I look at the earnings persistency score, it's 100%, as I just illustrated. The company does offer a 7.98% dividend yield, so I can use that to find good income investments. And then if I'm just looking for companies that have decent levels of growth rate relative to what their valuation is, then that's where the screening tool comes in. So we appreciate everybody being here. I want to thank everybody for being here. What the seminar, I'm going to repeat myself, this particular webinar is about how you can utilize FastGraphs to find good investments regardless of your investment objective. But if you focus your investment objective on the metrics that are available on FastGraphs, as I showed you here in the portfolio, this could be one of the ways for you to identify companies. But I'm going to turn it over now to Nathan and let him get into the screening tool a little bit, and then we'll conclude with Colton going through some of the real ins and outs of the screening tool, as well as discussing some of the things we have in the planning phase. So go ahead, Nathan.
Yeah, great. Thank you very much, Chuck, and thanks you all for being here. Excited to talk about screening a little bit. I've got one screen that I like up, but before I get into the mechanics of how I did this screen, I'll just give you a little bit of, this is my own approach to screening, as folks are asking about how do we find good opportunities. I like to start with the story, so to speak, instead of the metrics. So in kind of qualitative terms and just plain English, what am I looking for? What kind of company am I looking for? And you might have different preferences. One type of company I really like is a solid earnings company and a company with pretty consistent growth. And so the question becomes, all right, well, how do I get a list of companies like that? And so this is one screen I have. I don't have a ton of criteria here. Reading through the questions beforehand, I know a lot of people were commenting, and there's so many different things you could screen on, and that's true. And it depends, of course, on what you're searching for. You got a lot of options here. That's why I like to start with a story, because then it helps me narrow down what items I want to look at. So I've just selected the United States here, and is primary. For regions, I've got the US. But then I really only have 4 items. So I go down to EPS, and I've got this adjusted EPS persistency score and adjusted EPS growth score. These are 2 of the FastGraphs items that I really love, because I like the persistency, just what it sounds like. How consistent are their earnings? And then the growth score, where do they sort of rank? Where do they fall on the growth front? So I selected high. And so this is pretty restrictive. And one thing I would say is I didn't bullseye the screen I'm about to show you the first time I tried it, right? So I ran a screen. I thought it was a little too restrictive, so I changed the criteria, and then I got a few too many stocks in, and so I changed it again. You just kind of have to tinker with these things to get what you want. So don't be afraid just to test it out and see how it goes. And then I also added in this, I want at least 10 years of history. I like faster growers. I like even firms that don't necessarily make money that wouldn't even have positive EPS. But for this screen, I really want to focus on quality earners. So I really want some that has a track record and a history, reduces some of the guesswork, at least in my opinion. So this is all historical here. And then I'm also interested in the future. So I'm going to go to the estimated tab, and here there's an EPS growth. I've set the minimum at 7. Why 7? There's nothing magical about 7 whatsoever. I tried a higher number. It was too restrictive. I tried a lower number. It let too many companies in. I was trying to get a reasonable number of companies to look at, was part of my goal here. You might say due partially to the laziness if I was being uncharitable to myself, but just in the interest of time. It's a lot easier to go through 40-some companies than hundreds of companies. It's kind of the point of this screening, is to help narrow it down. So once you have the criteria and just hit the run query, you get the list of companies. 48 companies met this. I like to use this add to portfolio feature and dump these into portfolio where I can take a look. And once you add the portfolio, I can go there. And then from here, I can just click on the first one and I can start going through these. And the main thing I'm checking here is, do these graphs look like the kind of graphs I want, like the kind of company I want? A couple things I'm going to do is take the price and the normal PE off. So what I'm really looking at for now is just a check of this dark green, which is the earnings history. I already screened, obviously, for persistency and growth. That means it should look something like this. If I've done my screen the way that I want it to look in my mind, I should be finding companies that look like this, where you see a pretty steady earnings growth over time. So this is going to rule out a lot of companies that have a one-off dip. And I don't want to rule off all those companies. During the pandemic, we saw some really great companies have a really rough year on earnings. I don't overall want to rule them out. But again, just for this search, I want to just narrow it down to these companies that have this real steady look to it. So I'm just going to scroll through a few of these, and you can see the way the graphs are going to look here. And they all sort of have the general trend of consistency and consistent growth. That's what I was going for. One thing I wanted to talk about just a little bit, I wouldn't try to talk anybody into or out of any approach to screening, but a lot of folks asking about how to screen for value and how to find obviously undervalued stocks. And then also a lot of questions about how to avoid value traps. And just to hit one approach I like to use here to address both of those is I actually don't like to screen on value. I like to screen on fundamentals. So I like to determine ahead of time fundamentally what are the features I'm looking for in companies for a certain type of company I'm looking for. And so then I want to find a list of all those companies. Then I'll come in and look at value. So after I've got this list, now I can pop the price line and the normal P onto something like AutoZone and take a look and say, well, those earnings do look tremendous. And you've got pretty strong expected growth here too. It is a little bit above the lines. This is a company that probably wouldn't show up if I was trying to find a company that was, for instance, the black line was below the orange or blue line. But I like the fundamentals of this company, and whether or not this current price point, whether or not the value's right, I view as the second question to get to, right? So I like the fundamental look. Then I'm going to add in the value piece. And the way that I think that kind of addresses somewhat this value trap issue is when you just look for companies that look cheap. I give a lecture at the university that is titled Looks Cheap, Not Cheap. And it's about value traps. And it's about how a lot of times if you just go searching for low multiples or multiples that are currently low compared to how they've been historically, you will find some bargains, but you'll also find a lot of things that are cheap, so to speak, for a reason. The multiples are low for a reason, for a fundamental reason. So if I kind of start with fundamentals and pick the type of strong, healthy fundamentals I like, it's a little bit less likely to fall into a value trap. Obviously, no guarantees on any of that. But this is one example of a specific screen that I've used, and it takes advantage of a couple of these metrics and fast graphs, the earnings persistency and earnings growth scores, that are really handy and really lead to the type of picture I really like. And again, I got down to 40 some companies here. It doesn't take that long to scroll through these and check the value side of things. But you can apply this is a specific example. You can apply the general approach, I think, to whatever it is you're looking for. If you prefer very high growth companies, if you like turnaround companies, whatever it is that you're into, it's just a matter of taking that story and then putting it into the right metrics and tinkering until you get graphs that kind of look the way that you had imagined, and take it from there. So with that, I'm going to turn over to Colton.
Thanks, Nathan. Before I share my screen, I just wanted to make a comment on some of your screen, like on your screen right there. If you can actually reshare it, because one of the things that we are doing with this webinar is kind of showing some like tricks of the trade or whatever that I think we all have different ways that we work the screener. And so you're right on the whole value trap thing. But if you go back to your screen and let's edit some parameters, and I want to play around with a few things specifically on your screen that we were looking at. One thing that you could do is if you go to estimated and then click on total annualized ROR and add that feature. And then now let's click on a custom one. So yeah, click down there and then hit other. Let's maybe set it between 1 and 15. So do 1 there and 15 there. And the reason why I'm choosing 1 is a minimum. So this would be saying a total estimated annualized rate of return of the investment now. This is of the investment. So this is now adding in more than just fundamentals of at least 1%. And a maximum of 15%, because if it's too high, if you start to see 30, 40, 50, 1,000%, these large numbers, then you can run into the concept of a value trap. So let's go ahead and hit run query. So we had 48 there. Now we're down to 9. Okay. So one thing that you can do is you can click on some of these items right here. So these things are the snapshots. So this will give you an ability to quickly take a look at some companies, right? And then the other thing that I want you to do quickly is just hit Cencora from there, like the ticker. You'll be prompted to save your changes. You can either continue without saving or save. And notice up at the top, you actually already have this screen plotted. So now with those new parameters, all the stocks that are showing up in here are based off of that screen. Now you can go through that. And if we were to, for example, go to the forecasting tool, we should see that this Cencora has somewhat of a positive rate of return if you go all the way out. So 4.4%. Now that might not meet your investment needs. So you can tweak those numbers. Instead of it being 1 to 15, you could choose 8 to 15 or 8 to 30 or something like that. And then now that's also incorporating like a return aspect to help then even bring down that list even more. So from 48 down to now 9 that we had found. That's just a quick way to handle that. But I also wanted to point out this whole concept right here, right? So go ahead and click this drop down and you can see we have, so I guess since you didn't save it, since you didn't save the parameter, it's got the 48 tickers, but if you had saved it, it would actually, it's running this screen and you can now sort through this screen and you actually don't have to do that trick anymore with adding it to a portfolio.
That's very cool.
You can actually draw the screen itself, and those snapshots are there for the ability to, instead of even having to draw the screen, so you can draw the screen if you want to and go through it that way, but the snapshots on the screen itself give you an ability to just kind of like sample, right? And get a quick snapshot, a quick idea of the types of companies that you're getting in your screen. So then you can go up and modify what parameters you're using to help break down that screen. Everybody, we get, not everybody, I shouldn't say everybody, we get some people that complain about the limit that we put on the screen. So we limit it to only showing 500 tickers. Well, in reality, there's no point in going through 500 stocks. The whole point of the screening tool is to help break down and shrink a list of potential candidates. And then you could have a list that updates every single day. So every single time you click on that screen from the My Screens or hit run query, it's running the query, right? So tomorrow, this list could be completely different. There could be 15 tickers on this list if there's a huge drop in prices on a bunch of stocks, or it could be down to 3 tickers if Cencora really increased its stock price or something like that, or if earnings significantly changed, something like that. So every single time you actually run the screen, new data or the fresh data is being pulled and queried against, and these lists are constantly changing. So yeah, I just wanted to point that out before I took over.
Yeah, that's awesome. Those are great additions.
Now let me share my screen. And I just wanted to take some time to go over a lot of these points and what we basically have available in the screening tool, just to give a better understanding of what features people have, what they can do, and maybe some features that they didn't really realize that the screening tool can provide for them. So up at the top, we have the general, historic, and estimated sections, and then regions. This account that I have right now doesn't have international data, but if you had international data, you'd also be able to select a lot of different regions, all from around the world. So this opens up your stocks from roughly 20,000 between US and Canada to roughly, I think it's like 80 or 90,000 that we have available. And I think one thing that people get confused about is country of incorporation versus this region parameter. So country of incorporation is where the business is incorporated at. That doesn't mean it's where it's traded at. Region is where it's traded at. So there are companies that can be incorporated in Ireland that are trading on the NYS, right? New York Stock Exchange. So the New York Stock Exchange is in the United States region, right? So setting country of incorporation wouldn't necessarily limit out Canadian stocks if you had both of these, right? Because you can have a US incorporated stock, you could have a Swedish incorporated stock trading on Canadian exchanges. But the way to actually limit the exchange itself is by clicking this region area. Then country of incorporation, once again, is that. So, and you don't have to actually select values for this, right? Like I can leave it as any and it'll show me country of incorporation. So for example, if I just do, I'm just going to run this really quickly. I have no clue what it's going to return. So notice that I have this right here. Okay, so this stock is incorporated in the United States, but it's being traded on, this specific stock is being traded on the Canadian exchanges. This one right here is a Cayman Islands being traded on the Canadian exchanges. So I just wanted to point out a difference in terms of what the region is compared to what the country of incorporation is. Then this is primary is you could set it to any or true or false. Once again, if you just click one of these things and hit run query, we can now see primary showing up here, right? So what this means is the primary listing of the company. So lots of companies have sub listings and they all have a primary one. Like Johnson & Johnson, if you have international data, trades on like 10 different exchanges, but its primary listing is in the United States. So if you wanted to limit primary listing and only look at the primary stocks, no matter what regions you're looking at, what you could do is set this to true. And that would show only the primary listings. As we can see, this is all set to true now. Only the primary listings of that stock. You can add your GIC sectors, everything like that. Notice that some of these items have include and exclude. Okay, so if I were to run this, I can see like biotech, or let's just use the sectors. I can see that healthcare is this type of an item, or industrials or whatnot. So what I could do is I could say I only want utilities and energy, maybe, right? And that's going to give me a completely different list. Like that brought it all the way down to 84 now based on the parameters that I have. and we've got energy and utilities right here, okay? I can also exclude those. Maybe I don't want either of those, right? So instead of including them, I can exclude them, and now I'm back up to a large list. And the whole point is to keep breaking this down to smaller and smaller amounts, because there's no point in going through 500 stocks, right? I don't need to click through 500 stocks. I need to find the type of companies that I want to find and have a small manageable list to really look into and have in order to research.
Can I interrupt you real quick before
Yeah.
you go too much further?
Of course.
When you were talking about primary tickers and so on and all the different exchanges, one of the questions we got was there are certain companies that have multiple listings, as you pointed out.
Mhm.
But then when you look at the forecasting graph, some of them don't have analyst scorecards. So am I to assume that the primary ticker will be the only thing that has like the analyst estimates and the scorecards typically?
Typically, yes, the primary listing is the only one that actually receives the estimate data for our data provider, but we are also working on expanding that out to the other listings. And the whole point is those other listings are in different currencies, right? So like, I think Johnson and Johnson, one of their listings is in like Argentina. I don't know exactly what the Argentinian currency is. I'll just refer to it as an Argentinian dollar. If you were to look at that listing, it's all in Argentinian dollars. It'll show the currency and stuff and whatnot. But we only technically get estimates for that primary listing. Now we do try and expand those out to the other listings. I believe most of our sub listings should have the estimates data, but we are working to expand that more and more. That's through a bunch of currency conversion that we have to do and whatnot. So yeah, did that answer your question?
Yes, I think because we had that a couple of times. So thanks.
Okay, cool. All right. So yeah, these are the only include exclude items that we have. But all of these items right here, you can choose to include or exclude in your query results. Then there's a plethora of other items. I know it can be very daunting, but we try and organize them in a really meaningful manner. And on the other side, we constantly get requests for adding more data items, which we are going to be working on adding more data items. And we've tried to organize this in an easy to use manner. So under each one of these tabs, right, under historic, estimated, and general, region doesn't have it, but we have these like sub filters. So notice this says general, and I also have general here. If I click on this, it'll just show me the general. And I can also see that I have 6 things selected under general. So it's also telling me which ones have items selected. If I wanted to look at EPS, I could do that. I mean, I could look at it under all and find it here. And I have kind of like, think of general as being like the current type items. So this is current PE, this is current EPS yield. We've put adjusted EPS score here because this is just like, we only have one value for it. It's the longest time frame that we have available for it. We calculate the earnings persistency score and whatnot. And then we also have a historic section that has timeframes that you can select. But most of these items are going to be basically repeats for the data items that we have available under the dropdown. And what I mean by that is, let me just click this. So this dropdown right here, these are all the items that we have available for valuation purposes, and those are the same items that we see underneath here, right? So like EPS is adjusted EPS, EPS basic, diluted, net operating cash flow, so on, all the way to sales. And then we even have like a specific section for dividends as well to check out dividend yield, annualized dividend, and last 12-month dividend, things like that. Then the historic section is in a way set up very similar. It's got some different filters than the general section, but it's really just for that drop down area that I was talking about. So now I can look at the historical compound annual growth rate for the EPS, for the adjusted EPS, and the normal PE for the adjusted EPS. Then I can also do that for diluted, right? So then I can also click these and break these down and notice that they're in pairs because we have both the normal price to metric as well as the compound annual growth rate for these values. Now, something to keep in mind is I covered this on the last webinar, and that is like, let's say So this MRU is one that, let's see, is that what I have? Yeah, MRU is what I have. And I can see that the 10-year historical EPS compound annual growth rate is 10.12%. Now, if I click 10-year, I don't get 10.12%, I get 8%. But something that we covered on the last one is you click 10 years, it's just drawing 10 years of data. Then say 10 years of historical data. When you click this, it just says 10 years. So in order to have 10 years of historical data, I would have to scroll out all that estimate data that we have. And now here I have that 10.12% that matches. Okay. If I also put let's just throw the 10-year normal multiple on there. So in order to do that, I clicked and then hit run query. And here's that 10-year normal PE. We have 17.25%, times, and then we have 17.25x here. Now, if I were to click, what other ones do we have? So we have a 5-year. So in order to match this 11.28, now that I've scrolled out the estimates, I can just click 5-year, and here's that 11.28. So just so you guys can learn how to verify the data that you're seeing, that's another important feature and factor to keep in mind. Finally, we've got this estimated area, right? And so once again, this is set up the same exact way where you've got all of these items available in the dropdown, and then all of these items are what's available on the chart for viewing purposes, right? So in order to reconcile these numbers, right, let's throw on just a few of these, and I'm just going to filter this right now to MRU. So I can see that its expected EPS growth rate is negative 3.36%. Well, the spot that I go to do that is I go to forecasting, and 8.97% is the growth rate. I can match that here. If I click here, estimated ROR matches up with this total ROR, this negative 3.36%, and then estimated annualized ROR, that matches this total annualized ROR. So that's including dividends. So the way that you match the estimate numbers up is by clicking on the last point of the estimates tab specifically under the forecasting calculators. And then that kind of covers like all the way that the data items are set up. It's totally optional to you to use certain data items. If you believe more in cash flows, go for cash flows. EBITDA and EBIT's available. Sales is even available. All of those items are available for you guys to use and filter on. One little trick that I like to do is I have set up this feature right here. This is something I actually like to do on a lot of my screens. And this is just another way for me to ensure that like I'm seeing positive growth rates. You can increase these to low growth rates for all of these, but this is basically saying that each one of those time periods, I should be seeing a positive compound annual growth rate. That helps kind of draw stocks that look like this shape, right? If I chose negatives for these ones, they could look like this, right? But this is doing something like this can help. It can help create that picture of what most of us are trying to look for in terms of that like exponential growth of a company. One more feature that I want you guys to be aware of is this preset screening area. So as Chuck showed, we had the preset portfolios area. That's a great spot to look at and whatnot. You can create your own views to put on there and kind of use that as a hodgepodge. But we also have this area where, for example, that portfolio that we have available, the S&P 500 growth, we actually put some parameters on it to limit it. So now it's the S&P 500 portfolio. This is every stock that you would find underneath this portfolio under the preset portfolios, but with certain parameters. Okay, so we're looking at the best persistent growers at double-digit estimate growth and price returns with a margin of safety. Okay, so once again, I can come in here and I can look at, not going to be necessarily the best historical picture, but I can look at these stocks and see what type of stocks I have in here, and then potential growth rates, right? Not every stock's going to look great. That's the whole point of going through this. And what I could do is click on this. It's now going to draw that screen. I have FMC here. I can do all the research I want. I can come to the forecasting tool, run my forecasting, and then at that point I can add it to a watch list if I really want to. So that's a way to go through a list of screens, of the preset screens, and really kind of drive that down into a watch list that you want to create. Like maybe none of these stocks would be something I would want, but Cummins, okay, this looks interesting to me. Maybe I have this test portfolio and then now I can save it to that. Now it's in that watch list for me to always refer to and come back to. So definitely check out these these preset screens. If the screening tool is super overwhelming, super daunting, we have set these up. These are some awesome spots to really find some great stocks, and definitely recommend you guys taking a look at that. I mean, and these are going to change possibly every day, right? So you have a almost an endless list of stocks to go through. We've got dividend paying stocks. We've got the Dow in here. We've just got good growth stocks, some mid cap stuff. I recommend you guys going through all of these, and you can mix and match them and find them and add them to a portfolio like I showed you there, and add them to a watch list and go from there. And then finally, before we start to look at some of these questions that you guys are popping in the Q&A, I did just want to announce some new features that we are working on for the screening tool. So we are actually going to be reworking the entire screening tool. And the goal is to make it a lot less daunting of a look here in order to kind of create queries in an easier fashion. I don't have anything to show you guys right now, but I promise it'd be an easier query builder. And then one other additional feature that we are super excited to be working on is the ability to compare different metrics. So questions that we always get are, how can I make sure that the current PE is less than the 5-year normal PE? Well, with the new screening tool, you're actually going to be able to do that. You're going to be able to compare certain metrics to each other. So you could say, I want the current PE to be less than the 5-year normal PE, and I want the 5-year normal PE to be less than or greater than the 3-year normal PE if you really wanted to, right? So that possibility is endless. You guys are gonna be able to create a bit more complex queries, but the builder itself is gonna be a bit easier. And then the ability to compare different data items to others is gonna be huge. It's not just comparing items to themselves. So it's gonna open up a whole new list of possibilities in order to find potential great stocks. But in the meantime, there's so much that you can do with this already. Just kind of have to think about how the data is formed in the tool and build your queries out from there. And then, yeah, we also have the preset screens available, which once again, that is an awesome feature. So I want to take some time and talk about some of these questions that you guys are asking. Scott Capel, I believe I'm pronouncing your name correctly. So you're asking if the parameters are available to look at the preset screens. At this time, they're not, but with that new tool that I'm talking about, they will be available. And then you'll actually be able to modify them for yourself. So you can even make modifications to that screen and then save it as your own screen. It won't be saved for everybody, but yeah, it'll be available for you to modify. Lyle, you kind of are asking, in a way, a similar question, adding some preset screens for Canadian stocks. So we definitely can do that, but with that new feature, you'll be able to modify the preset screens and just change it to Canadian stocks for yourself, right? So that'll be a great feature for you as well. Let's see. I'm with Neil wanting multiple column sorts. Yeah, that's something that we can definitely get added in. I'll talk to the team about being able to sort multiple columns, not just have one column sorting at this time. Increasing gross margin has been a good indicator of performance. Can we screen/forecast for estimates for gross margin expansion for the next 3 to 5 years, for the next 3 years? So I don't believe we get estimates on gross margin, unfortunately. Robert Hallman, I'm answering a question for you. Unfortunately, estimate data can be pretty slim. So gross margin expansion, that's not really something that we can really estimate for, unfortunately. We don't build any estimates in-house here at FastGraphs. We buy data packages that have professional analysts that provide estimates for us. Neil, you asked when ETFs will be added. So this isn't necessarily a topic on screening, but we are working on bringing that. That is definitely a big feature request from a lot of users. As of right now, we have the SPY and IWV ETFs. I know that's not nearly the whole universe, but those are available, and we're going to begin working on designing out better views for those. And then once we have better views for those, kind of some understanding of ETFs, a better understanding of how to actually research ETFs, then we're going to start building out an ETF package for that. So anybody who has any wants ETFs in the system and any sort of things that they're looking for in ETF, we would love to hear some feedback on that. That is a big request. Let's see. I think I answered this one already. Editing the parameters of preset screens. So yeah, that's hopefully coming relatively soon. Ian Wong, is the screening tool capable of selecting stocks that outperform the SPY total return? So yeah, as of right now, we don't have the ability to compare metrics, but that would be possible with the new tool. Now, what you could do in the meantime is take note of what the SPY has returned over those time periods. You could easily do that just by coming here, right? And then we could look at the performance section and then look at certain time periods, right? So here's the 10-year time period, blah, 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 right? So I could pull and understand what this data is and kind of compare it to those timeframes. But I guess there's not a specific like 10-year price comparison to look at, unfortunately. Let's see. Daryl Olson, this question isn't regarding the screening tool. This is regarding broker connections. So we have announced broker connections in the past. We're actually quickly approaching releasing a closed beta for broker connections. So that's coming soon. It's going to be dependent on usage of the app and whatnot. And we're going to be slowly selecting people until we move into a full release for that. But it is coming very soon. I promise you guys will see that in the app. Someone asked, how do we select only the S&P 500? Chuck did that by going here under preset portfolios and going to SP 500. Someone's asking, Stephen Reinbolt is asking about adding more international stocks. We don't really have any control over that. We've purchased a package for all international stocks, at least what our data provider covers. So as they provide more coverage, we will automatically get all of that. But in terms of adding more, I'd say we don't really have any say over it. We do roughly cover 90,000 equities, 80 to 90,000 equities with international stocks. Query parameters on the preset screens, already answered that one. Can we compare the forecasted versus actual earnings that were in the past? As for, if you're asking for the specific values, like saying $5 in EPS versus an expected $6.30 in EPS, no. It's only growth rates, I guess, because the value doesn't really matter in itself as much as the growth rate does. But what you could do is just screen on growth rates, right? And if it's growing positive, that would yield basically that result. Portfolio options, no, that we're not going to talk about on here. And then we've got some other questions like how to identify a value trap and stuff. So we're starting to get a little off topic from what the screening was. And also we're kind of running out of time. So I guess Chuck and Nathan, do you guys have any final comments or questions on anything before we kind of wrap this webinar up for today?
Yeah, I'd like to basically say that one of the things, there's a lot of questions, as Colt mentioned, that are not on the topic of this particular webinar, but we plan on doing a lot more webinars and we'll try to integrate those questions in. One of the most common questions we get, and I'm going to share my screen here. One of the most common questions we get, and Colt and I have talked about this quite a bit, is this idea of how can you find stocks that are below the blue or the orange line? And the answer is you can't do that now, as Colt pointed out. But if you're seeing my screen here, there are workarounds you can do, but they're not specifically what you're asking for. For example, there's a screen here that I created, and when you create a screen, the metrics that you pick and the items you pick will show up down here. All right, so I just added two. I went into the general section, I guess. Now, what section is that in, Colt? The EPS section. And I added the normal PE for 3 years and a normal PE for 5 years.
That would be under the historic section.
Under the historic. And then I added also the PE here, which I originally screened for. So even though you can't necessarily specifically go below the blue line, below the orange line, if you look here, if I move this column over to here, and I'm looking for a PE, a current PE, like we'll look at Cummins. With Cummins has a current PE of 14.84. The 3 year normal PE's been 15.29, and the 5-year has been 13.6. So if I draw Cummins, you'll be able to see a stock that is close to what you're asking for. In other words, it's trading within reason of the normal PE and the orange line. Now, we also got that question, and I know it's a real basic question for some of you, but I do want to answer it because there are some people that have a lot of confusion on this. When you look at the lines on these graphs, okay, they're real simple. The black line is weekly closing stock prices. Take that off. The orange line is a plotting of the earnings growth times a multiple that's applied, which is the fair value multiple. So this line has a 15 PE everywhere. And then the normal PE is what the average market has been. And on the case of Cummins, the numbers are pretty close, but you can see the normal PE is around 14. The calculated fair value ratio is 15. But by looking at this graph, you can see times when it's above the 15 and times when it's below the 15. I don't want people to get hung up on these numbers. They're references. They're things that you can use to evaluate what you're looking at. And I want to make that clear. But you can work around finding things close to price being below the 3-year or 5-year PE. You could pick 10-year PE, you could pick other PEs, but you can do it by just simply comparing the PE currently to what the historical numbers would have been. Now, this isn't perfect. You're going to get stocks that don't match. Like here's a 5 PE, it's below both numbers, but you'll get some PEs that are currently above their historical numbers, but they'll look close. And so this will give you as close as you can until Colt and his team get this new procedure built out. Now, I want to take a moment here just to thank everybody for being here. I do want to point out that a lot of the questions you're asking about other features of the tool, we plan on covering those in future webinars. One of the questions we got here quite regularly was, can you look at outstanding shares? Okay, so the navigation bar here is where you want to go to see those things. You can click these arrows and it brings up the different navigations. So one place you can go very quickly is to fiscal fitness. Okay, I guess I'm still staying in the screen, but you can go to fiscal fitness and you do have shares outstanding under the column. It would be called share buybacks. And you can see shares outstanding and just point to the bars there. And it tells you how many shares they have. So you can see changes in shares outstanding by going to fiscal fitness. You can also do it even better by going to the financial statements and going into something like the balance sheet and get shares outstanding and so on. Is that the right one, Colt? Yeah.
Income statement, it would be under
under income statement.
underneath net income.
Yeah. So there's a lot of other features to the tool, and we're going to be covering these features in future webinars. I do want to make that clear. I do want to thank y'all for all the questions. The feedback alone is what's important to us, because even though we probably didn't get to answer everybody's question, we now know what you guys are thinking about, and we plan to incorporate that into future webinars. So I want to thank everybody. I want to thank Nathan. I want to thank Colton for helping us here. Now, of course, I want to thank all our loyal subscribers for attending the webinar, and we look forward to building a better tool for you in the future as time goes on.
Yep. Thanks, everybody. I think that's it for today. So we'll post this to the YouTube channel in case you want to rewatch it. And yeah, feel free to reach out to us at any time for any questions, any needs that you guys have. We appreciate it, everybody. See ya.